Hey, what's up, everyone? I hope you're having a fantastic day. I hope you had a fantastic New Year's, and now you're up and ready to get back to the charts. So, today, what I want to talk to you about is the complexity of ICT concepts. So, what I'm trying to do in this video is pretty much give you a small insight as to my trading strategy, as to how I use these concepts to pretty much help me build my narrative and my bias so that I can go ahead into the short term time frames and find my entry. So yeah, I hope this video's purpose is meant to kind of simplify the process, and it is no way a definitive answer as to how is it that you should be analyzing the markets. Once again, I'm an ICT student as well, so I am currently learning with you in the process. So without further ado, let's get to it, right? So first, I was looking at the daily, and I saw that we were still going up on an uptrend. If I switch here to my daily, you'll see that the market was still opening above this candle, so I suspect that perhaps we were going to continue this rally here. But for the time being, I can't really predict the future like that just yet. See, this is the way I trade. I don't really like to have myself set forward and just one idea like today I'm just gonna buy. No, like I want to be open to the possibility of having to sell as well. So trading like this for me gives me an opportunity to look at the market both ways and come up with an idea as to what I could do right now. So I'm gonna go into my 10 minutes. So I deleted a bunch of drawings so that I can help you see things clear. But I noticed like around here, around the what time was this? Around the 8:30 during the embargo open, that was when I noticed a swing low develop as well. You'll see here that this candle's low, this candle's close was the lowest point ever because the next candle next to it opened above this one. So this is my 3-bar pattern that I keep talking about in this YouTube channel, and you'll see that this created my swing low. Seeing that where we are in the market, what I want to look is supporting structures so that I can get into the market in a more intermediate range and have that intermediate range develop a short-term range contrary to the intermediate range, and then have that push up. So what do I mean by this? So here's my swing low, right? I'm gonna go deeper, and again, I'm just looking for my 3-bar pattern to develop. Yep, here's where I saw my 3-bar pattern develop again. You see this close is 114.09.9, and then this open is 114.10. So right away I know I have 1, 2, 3 candles here that are my 3-bar, and in order to solidify that this is a swing low, I would like for price to develop a body that closes above the open of this sell candle, and it did. So we even got as far as to here. The close of this was 114.38.9, and again we're in this trending market, so I would like to see price retrace down to a discount level, right? This is our premium area. This is our discount area. I'm not definitely calling this my certain swing high, like this is the top of the market. What I'm simply saying is that right now we are in premium mode. So the market's going to want to seek it's going to want to create price action so that it can create a sell, right? A selling environment so that it can get down to discount, and again buy cheaply so that you can push the market higher. And so that's what I was expecting from the market to do. And as you can see here, this is where I was getting my entry right about here. So now I notice that we are getting into discount mode, and then this is where my entry is going to come in. So we're in the 1 minute right now. We're going to set ourselves to the 15 seconds. And again, we want to, when you buy things, right, you want to buy things cheaply. So this goes back to the smart money concept idea that you want to get into a range where the market is printing lower prices. In this case, if you want to buy, you want to get it into lower prices so you can get on discount, so that you can get into a fair value gap that's cheap, right? We're printing lower prices. I have my 3-bar pattern again. You can see, wait, what else? Yeah, on the 1 minute, you see that the close of this candle is 114.41.9, and this one opened at 114.42. So right away I knew, okay, 1, 2, 3, and then this candle continues for lower prices. So I was like, okay, so we have a swing high here developing. What I would like to see is at the end of the swing high at the bottom, as it's printing lower prices, I want to see it develop my fractal entry. So again, we're under the impression that this structure wants to create higher prices. So we have our long-term trend, we have our intermediate range here, and now we want to see price dip into discount so that we can buy it here to go up for higher price. And look what ended up happening, right? On the 15 second, we can see that price tapped into the swing low, once again 3-bar pattern. So I can confirm that this is an actual swing low of the market. We got in there, we dipped into it, and then we started forming something like this. Now, this in itself is a 3-bar pattern as well. We see the close of this candle is 114.19.3. The open of this is 114.18, so it's less than that. And then right away, the next candle when it closed is 114.18.9, closed higher than the opening of this candle. This itself, I'm looking at the bodies, I'm not looking at the wicks. So this itself is a 3-bar pattern. So, and what ended up happening was that we got that institutional sponsorship, and I was just waiting for it to break this swing high. I'm not looking at the wicks, I'm just looking at the bodies. So over here, let me indicate that for you. This in itself is a swing high to me. So I wanted the price to come reach up here, right there. So I wanted to overtake it so that I can confirm that there's enough sponsorships so that we can seek for that fair value gap, right? Because this is a swing low. This is kind of like what we learned in the mentorship. So anyways, right? We see that we collected this liquidity, right? And now we want to see price dip into discount, right? Because this in itself, if you think about it, it's a range, right? This in itself, this whole move up here, this 3-bar pattern, so this whole swing low, that in itself is a range. It's a fractal. So I want to see price dip into discount. So as you guys can see, this is my 50%. I wanted to dip in less than that so I can get into a good offer and seek my fair value. And here's the tip: seek your fair value gap on discount. And Lord and behold, where do you see it? There you go. You guys see the fair value gap right there? So then that's where I was like, okay, I'm gonna set my entry just a little bit above it, because of spread. And then now I just want the market to react down here. And what's my take profit? Well, if we're trading inside this internal range, then I want to trade into an area where we're not necessarily escaping the entire range in general, because again, we don't know, well, I don't know how to read the tape enough that I can be confident that that this is going to be the setup that's going to take us for higher prices. But I want to set my target to be a low hanging fruit. So this trade is obviously going to be like a 2RR trade. So nothing fancy really. I have it to set to 2.4, but let me see here. So this is the 2, right? So then price, as you can see, came into discount beautifully. Sorry here. This is my fair gap, don't forget. And you'll see that's when it started reacting. And it didn't take much of a move before, look, our target was hit. Could we have been greedy and maybe caught a 3-hour move? Yes, we could have. But I don't know that for sure. And I told you recently that when I'm trading inside a range, I don't want to aim for targets that are outside this orange intermediate range, because that's, in my experience from my back testing, it doesn't really behave in that manner. And look at this. You could have even aimed for this fair value gap down here. And one thing too I wanted to see is that it didn't take that much effort, right? You're in this candle for 15 seconds, so this is probably tapped in. That's like a minute and 15 seconds for you to get into a trade and make profit, right? And again, if it's 2RR, whatever you put into the system, 1%, 2%, you can see how this is already like a potentially 4% day. You do this another couple of times and you could just pass the FTMO. So this is what I've been trying to show you, that ICT is complicated, and I hope that this video shows you a simplified manner. And one thing too I want to add is if you made it this far in the video, I definitely want to show you another extra tip, which is the SMT. If you don't know what SMT stands for, it stands for the Smart Money Tactic or Smart Money Technique. There's so many names of it. But what you can do too is compare it to other indices. So this is the US 100, right? Contract. You're going to compare it to the US 30 and then US 500. And then look at this SMT, right? I'm going to take the swing low. You're going to see that swing low's liquidity was tapped. I'm going to get my candle here and I'm going to match it. See, was it tapped here? Did it tap liquidity for the US 500? No, they didn't. But this one did. So right away I knew, like, oh crap, this is some divergence right here. There's a high possibility that this thing can go even higher. And so again, I set my setup. I go in here, get tapped on my fair value gap, and then boom, done. 4% in the day. That's it. You're done. If you want to keep practicing, I will come back in the afternoon. But lately, if you guys know about, I guess my personal life is that I've been kind of busy in the afternoons. Overall, this is how the SMT strategy works. You see a little bit of divergence. If it's on the lows, then you want to expect for a buy. If you see SMT diverges on the highs, then you want to seek for sells. This only goes for positively correlated assets. So when you're comparing indices, when you're comparing similar bonds, when you're comparing the same interest rates. I hope this video helps you out into understanding more about ICT concepts and the way that I use them to get into trades. At the end of the day, this is not the go-to solution, right? Because this still is trading dumb smart money. And what I mean by that is you're depending on market structure to give you a signal so that you can find your entry. You need to add a narrative element into your strategy. And that's the part that many people are still very confused about. I mean, heck, I'm personally still confused about how to implement a story into my structure. If you made it this far into the video, I can tell you a little bit more about the narrative that I've been learning about is that when you see price being traded under the 12 a.m. open, price is pretty much at a discount. You want to see it get traded upwards, especially if the story supports higher prices. And lately it has. I told you from the beginning of this video that if you look, not now, but earlier, you would have seen that there was still potential for price to actually construct a bullish candle for the day. This is what I mean when you build narrative across price action, right? You see all of Asia here is the accumulation. All this is the manipulation, right? Everything up to the US embargo lift was all manipulation. And then you're going to get that push up for higher prices, which is the distribution of price. And then you're going to expect price in the afternoon maybe to come down and then maybe close to here. That was my narrative. Also combine this as well, this is why I'm saying from earlier, when you combine narrative and structure together with a point of interest and a fractal, that's it. That's my strategy. So yeah, that's what I was looking for today, and I'm glad that I got into something as small as I did, just a 2 hour trade, which is not that impressive really, but if you put a lot of weight into it, you trade 2%, and you can see how that's a 4% day. Yeah, so I hope this video gives you an overlook of my strategy, how is it that I use ICT concepts to come up with a trade idea, as well as, oversimplifying things in a way that maybe is more digestible for first timers. I know it's still hard for me sometimes when he makes his videos. Some videos where ICT trades on areas where I'm like, wait, why would he enter there? That doesn't make any sense to me. But just keep going. Just keep going. Just keep going at it. Just keep practicing. Just keep looking at the charts, reading the tape, getting in on demo trades. And yeah, so I hope this video serves its purpose. And as well as if you have any questions, let me know down in the comments. I hope you have a good one, and I'll see you in the next one. All right, take care.